Hi there, traders. This is Brad Gilbert with the FX Market Insight for Friday, the 31st of January. All right, now, this is it. The UK will be leaving the EU today. Okay, hallelujah. No specific plan, but I don't think that's going to be a big problem as the UK takes hold of the economy. Now, talking about sterling, the sterling jumped just before the Bank of England decision. Now, it was largely expected. I didn't think that would go, but expected they would cut rates. They didn't cut rates, and sterling took off to the top side. But there was a lot of question marks over this because it moved about 1 minute beforehand very aggressively. So there was definitely a leak somewhere. They don't know where it was, but people are talking about it, even the central bank. Now, obviously, Brexit, the main thing. We've got the China virus. Now, the World Health Organization's declared a global emergency. I mean, 200 people are dead. I mean, there's 200 veterans in the US kill themselves every day. So I don't know what's a catastrophe or not these days. It's pretty hard to work out. One thing I'm noticing with a lot of the data that comes up, the Japanese data never really impacts. But I've got to say, over the last month or so, for the last couple of months, I've seen the Japanese data is the worst on record for about a dozen releases, right? That means like the non-existent economy over there is even more non-existent. It's going to trigger the Bank of Japan to do something at some stage. I mean, this is building up into something bigger than just weak data we've seen for 30 years in Japan. So keep an eye as this with this World Health Organization shift, that the whole risk or global growth risk is going to come up again, and that's something that we're going to have to deal with. Not ideal trading conditions. Now, if I just give you a look at the crosses, the major currency pairs. Just having a look here now, there's been no major shifts in some of these pairs. What we're seeing is some of them just tweaking with trend lines on the downside. There's sterling, that huge move back up following the no move by the Bank of England. And that was enough to sort of curtail sort of the downside shuffle in euro. We do have euro resistance there at 110.40. Dollar CAD, well, it's just sort of shuffling along, but overall, the trend is still higher. And dollar yen, I thought this little breakdown here yesterday, I thought that might have a bit more of a run. I mean, and it broke down sort of about 20 points and it's straight back above the market. So this is where the geopolitical events are a nightmare because you just can't tell what's real and what's not. When does it start? When does it finish? It's very hard to work out exactly what's going on. Now, one thing to make it easier to work out what is going on is to have something like this risk on, risk off profile or template that I've got. You can start to sort of piece things together. Now, I've been watching the correlation matrix all week very closely. The correlations, especially around gold, are dropping, right? They're still at 80%, but they were up at 95, I think it was earlier in the week. The yen crosses are still where the action is. Obviously, the yen being the safe haven trade, but we do have sort of weak Aussie, Kiwi, and Euro sentiment. So I'm not surprised to see those go. Just keep an eye on those other yen crosses. But as you can see here by the US equities, no real fear in the market. And that flows into the Asian equities, which are up over 1%. And you'd expect that same move in the European equities. Now, the yen crosses, as you'd expect with those equity moves, not really moving at all. If anything, just coming back slightly. All right, so that's where the risk on, risk off profile is. There's only a little bit of economic data to keep an eye on today. If I just come back to the MyFX Trading Hub, you're looking at the CPI flash estimate for the Eurozone. If there's huge variance, it can impact the Canadian GDP numbers and the core PCE price index, a really big inflation number the Fed keeps an eye on. So we've got these three factors, right? And they're, standing alone with major variance, they could come into play. But I've still got, if you look at the market drivers, Brexit's about to sort of depart, even though the trade deals they come up with will be the key focus. But this China virus concerns weighing very heavy on the market. Trump's impeachment thing, well, I was just reading about that. It's just so full of crap, as in the process is terrible. I don't know why they think it's even going to work. Now, trading conditions, I'd have to say sort of average at the moment. We do have some trending pairs. As I said, the Aussie Let me just swing back over to the charts. I mean, I do like the Aussie lower. You've got Kiwi banging down lower, and also Euro. They're sort of three pairs that make a lot of sense. Dollar yen, it's a bit of a question mark there. Dollar CAD makes sense going up, but there's no real levels, and it's looking very peculiar up here. Really strong GDP numbers might see it back down towards 131.5. Sterling, it's a bit of anyone's guess. Brexit, as I said, it's a big day. It's taken a long time to get here, but Boris looks like it's going to get it done, and then we can start working on the fundamentals for sterling as we go forward. All right, guys, that's pretty much it from me. Have a good weekend if I don't speak to you, and yeah, all the best for your trading today. Cheerio.